Hello everyone, welcome to a brand new trader interview. Today we are here with Zaki and he's funded over $1 million, pulled over $170,000 from prop firms in his time as a trader, and has recently withdrawn over 68K from Quant Tekel as well. So congratulations, bro. Thank you for chatting with us today.
Thank you for having me. It's been a very strenuous journey as a trader, but praise be to God, we're here, we're making payouts, and we've cracked the code.
Nice, bro. Yeah, I'm really glad to be chatting with you. I just wanted to find out a little bit more about your kind of journey, how you kind of got started in it. What was the catalyst for you wanting to learn trading, and how did you discover this whole world?
So me, myself, I've never been someone that was ever interested in trading. I used to be someone who used to be in e-commerce. I still am in e-commerce as well. So whilst I was in e-commerce, I was making money through e-commerce, and I had someone reach out to me for basically offering to teach me trading. Now that someone ended up being a scammer. He ended up using me for social media and whatever it might be, but I did learn a lot from him, and thanks to him I did manage to pass my first 10k funded account. Even though what he was teaching me, made sense, everything was applicable to the market, but he himself wasn't executing what he was teaching, and there was a lot of fake stuff going on in the background, but he gave me my foundations. Okay, then afterwards I went ahead and refined my knowledge. I went onto other platforms. I found a lot of knowledge on social media itself. One thing I like to emphasize, and one thing I like to tell people, and something that I categorize with my identity as a trader, is the fact that I myself managed to learn a lot of the things I know right now from social media, from TikTok, from Instagram. My For You page on TikTok, my Explore page on Instagram is all value-based content, and all I used to do was, instead of doom scrolling on TikTok watching dance videos, I was looking at trading education, people making content surrounding trading, and that in itself, I picked and chose bits from here, bits from there, and I created a strategy that fits me and fits my routine, and ultimately we're here now. The fact of the matter is, the way I trade currently is a formulation, it's a form of ICT, but again, I've never watched a single ICT video in my life. I've never gone through all 700 hours of whatever course content he's got out there. Obviously give him his flowers for being a mentor, and obviously giving the knowledge that he's given out to those people who are benefiting from it. But me myself, I've never actually watched one of his videos. But that being said, the stuff that I learned from social media, that was based on his teachings, so obviously I have to give him his credit.
Yeah, 100%. Look, at the end of the day, like, him as a person may not necessarily be the exact person you would want to learn from, but at the end of the day, I mean, he kind of did start that whole wave of, methodology, and it's kind of like a language that people use to translate what's happening in the markets. I mean, people have different languages. It doesn't necessarily mean that one language is right and one language is wrong. It's just a different way to interpret things, right? You mentioned that you were in e-commerce when you first started. Do you think having that kind of foundation before you started was a big part of you continuing and having success in this field? Because a lot of people just really ditch everything and go straight into trading, and I think that can potentially sabotage you. Do you think that was very helpful for you?
100%. The fact that I had money coming in from other places, other sources of income, did actually help me from a psychological perspective. I wasn't trying to save up money to purchase evaluation accounts with prop firms. I wasn't being emotionally attached to this 110k, 150k, 100k account that I've got, because I've got more money coming in, and if I do end up blowing an evaluation, if I do end up blowing a live account, I can always use money from my other sources of income to purchase other evaluations. So 100%, it took the edge off, it took the stress of trading off. And I always say this to anyone who asks me about trading. I always ask them, what have you got going on for you right now? Like, what kind of money is coming into your bank account? What kind of stability have you got? Because I don't believe you can be a successful trader without having stability first. You need to have some sort of income coming in, so you're not worrying about rent, you're not worrying about paying for your kids' education, food, whatever it might be. You need to have that stability, and then from there you use trading to build on top of that. So I don't believe you can use trading itself to go clear, as people may say, or to make it out of a certain situation you might be in. 100% it can add on to what you're already doing, but doing it as a last ditch effort, or your only one and your only plan A, basically, I don't think that's sustainable, because you'll be trading from a place of need. You're not trading from a place of where you want to perfect your trades, and you're not trading from a place of performance. That's what I'm trying to say.
Yeah, 100%. I think that if you're trading, like you say, from a place of need, you're almost in like a state of desperation. And at that point, you know, when you're in that state, well, you're panicking, because if you're desperate, you're not thinking straight. And if you're not thinking straight, you can't make good trading decisions. That's what it boils down to at the end of the day. And trading's already such a stressful thing. Why put more pressure on you and make it even harder for you to make decisions with a clear mind? Like, you've already sabotaged yourself before you've even started. I think that's one of the biggest mistakes that people make, and they believe that there is some kind of magical goose that lays the golden egg that exists out there that they can just rely on when it comes to this. But the truth is that there's ups and downs, right? It's the least consistent business ever. You can have terrible months, and that doesn't mean you're doing it wrong necessarily, you know? So I think that's one of the biggest mistakes that people make. From your side, like, what would you say is one of the big things that is preventing a lot of people right now from becoming profitable? What is the big mistake that a lot of people are making at the moment?
Honestly, right now, I would say social media is a big part of why people are not succeeding in trading. And I would say that I'm partly responsible, and I would say that other influencers in the trading space are also partly responsible for that, because someone who's never been in the trading space, when they see someone like a veteran trader making, I don't know, $4,000 within a single day, then obviously that in itself is something that normal traders will try and aspire towards, and there's nothing wrong with that. But the expectation is, I'm going to get to that situation, that stage, within the span of 2, 3 months, 4 months. This is my 4th year going into trading. This is my 4th year trading. I'm going into my 5th year next year. And I honestly believe social media creates this expectation, and people are trying to go ahead and grasp it without understanding the full reality of it. And again, I'll say it straight that yes, it's influencers that create this persona and this perception, but at the same time, influencers also create a sense of inspiration behind it. So it's all down to the individual and how they go ahead and perceive what they see on social media.
100%. And the thing is, people think that social media is reality. And I think that's why, like, people are becoming more and more mentally unhealthy. Like, that's why literally there's a mental health crisis, because people only see good stuff on social media. And what's going to make you super miserable? Well, everybody else around you being super happy, right? Like, if everybody is ridiculously happy and only showing the good stuff, and you think that everybody is successful and you're not, you're the only person who's not, well, you're going to be super miserable, and you're probably not going to achieve much. And so that's kind of where social media has us at the moment, and in particular with trading, where it's already so difficult, and all you can do is see people winning all the time. Imagine how difficult that makes it for you. Like, if you're trying to get up the hill of trading, it makes it so much steeper for you if you're so focused on social media and you're only seeing people make a ton of money and you're just losing money. Like, either you're doing something wrong or you just suck. Like, imagine that feeling. Whereas those same people you're looking at, they've gone through the exact same thing you're busy going through, but they just don't talk about it, you know? And that's why so many people end up giving up on this, because they think that it's just impossible. But they don't have that resilience to push through, because it just seems so impossible. What kind of like kept you pushing through and making sure that you didn't give up on this thing? Because that's what 90% of people do, right? They're not able to push through. How are you able to stay consistent and keep pushing towards your goals with trading?
There's 2 things. Number 1, the fear of missing out of what I could potentially achieve if I master this craft. And number 2, I've got a massive ego. I refuse to let the markets beat me. And that's literally what's kept me going for 4 years. I refuse to let candlesticks on a screen ruin my day and basically what's the word I'm trying to look for? It's just literally ego. It's literally the fact that I've gone ahead and started this. I refuse to give up without having at least seen some greenery on the other side. So that's the second point. And number one being the fact that if there's the fear of regret, the fear of missing out. If I quit today, yeah, what my life could look like in 2 years, 3 years, 4 years, yeah, scares me. That is in itself something that always motivates me, and I see it with people, and also having people around you that also trade. These people, if you stop and then you start seeing these guys progress as you go, as while you've stopped, and you see these guys go ahead and start actually mastering the craft and making money for the markets, you're gonna feel a certain type of way. And though that in itself is what literally just kept me pushing. It's like, cool, I've lost money first year, lost money second year, okay, cool. Third year, I'm starting to see money coming in. Fourth year, money's coming in, and now I'm going to my fifth year.
Yeah, exactly. I think at the end of the day, you know what you can achieve, and if you give up early, then you're just giving up on yourself, really. And I think a lot of people end up going down that road. But I also think that a lot of it is people just have the wrong foundations. They maybe get into it with, learning from the wrong people, or perhaps they've got unrealistic expectations. For those people that are looking to get involved in trading right now, what route do you think is the most efficient way to go about it? Whether it be going, through social media, going through YouTube, or should they try and find someone to help them? What is the route that you think is most efficient in your opinion?
As of right now, there's so much information out there. YouTube, there's people selling different courses. There's so much information out there that you could literally, if you put your head down, I truly believe you could you could learn all of the basics of trading and all the intricacies of trading within the span of 2-3 weeks, all the theory. But then it comes down to the application. The application is the hard bit. Now, when it comes to application, I would always say, obviously, you could go down the prop firm route, or you could go and deposit a smaller amount of money into a live account, and then from there, play around with it. You need to get accustomed to the feeling of going through losses. You need to get accustomed to the feeling of, I've just lost $1,000. Obviously, for someone that's beginning out, you don't want to take a loss that big, but you want to get accustomed to the feeling that, okay, I've just lost $100 here, $200 here, and you have to get accustomed to the feeling that, okay, cool, this is the reality. This is what's going to happen. The losses are there. And then also get accustomed to the wins, because once the wins do come in, you will 100% feel a sense of excitement, a sense of ecstasy, and that in itself can be detrimental to your trading in the long run. Both sides of the spectrum, being extremely sad during losses and being very happy during wins, will ultimately lead to your downfall. So you can either go for a small live account, and try and flip it to, maybe if you got $100, maybe try and make 10% on it within a certain period of time, or you could go ahead and purchase a small prop firm evaluation and obviously try and pass it. And then from there, you start growing. You've got your theory, you've understood your emotions. You need to go through a period of self-development as well, 100%. You need to go through a period of understanding, where you go and understand who you are as a trader, what kind of setups you yourself are capable of taking and capable of accepting as well. Like, there's, for some people, limit executions are better for them than taking market executions, because limit executions, they literally just place limits and let the market do the rest. They don't have to worry about it. Other people may be more comfortable with taking a more direct approach, where they take market executions, and from there, that might be their style of trading. There may be some people that prefer to trade London session, some people that may prefer to trade New York session. So whatever it may be, you need to go ahead and also figure out what your strategy is going to be. You got to figure out, like I said, there's so much information out there. You got to pick what suits you, and then from there, you have to go through a journey of self development, a journey of self-reflection as well. You need to understand who you are, and I always say this: the discipline that you have in your life will get reflected on your charts. So having a routine, being able to become a man of habit and become someone who is disciplined, that those habits and that discipline will be reflected in your charts. When you wake up in the morning and you don't want to go to the gym, but you force yourself to go to the gym, it's a similar sensation when you take a loss and you want to get back into another position and make that money back, but you stop yourself. Very, very similar feelings, and it's things you don't want to do, but you have to. You don't want to go to the gym, but you have to. You don't want to you want to take another position, but you can't because for whatever it might be. So it's very similar sensations and feelings as a human being. And once you do that, it's literally just subjecting yourself to time, giving yourself, not putting that pressure on you to become profitable with 1 year, 2 years. Give yourself 3, 4, maybe even 5 years, whatever it might be. You got to understand that trading itself is, according to some studies that I've seen, it's the second hardest profession in the world, day trading. So for you to expect to master it within the span of 6 months, 1 year, 2 years is unlikely. There are people that can do it 100%. I'm not saying it's not possible, but you have to be realistic with yourself. Are you one of the anomalies, or are you just another person that's trying to make it in day trading? Ultimately, every single person who subjects themselves to time, gives themselves enough time to master this craft, will make it out of the tunnel. There will always be light at the end of the tunnel. It's just a matter of staying on top of it and not giving up.
And do you think that like prop firms in general, and discovering prop firms overall, trading with them, it sounds like you started trading them pretty early on. Do you think that kind of changed your mentality around trading, and added to the progress that you saw?
With prop firms, you have access to more capital. You pay a small amount of money, you pass the challenges, and then you get access to a large amount of capital. That capital can go ahead and be translated into more income for yourself. So that in itself, as a normal trader, as someone who's from maybe middle class or lower class, they don't have $100,000 to go ahead and put into a trading account. The likelihood of them putting $100 in and flipping that to 1,000, 2,000, whatever it might be, is very, very low as well. Let's be real. So it basically bridges the gap between having to go from a small amount of capital to making big gains on bigger capital. It bridges that gap, and it fast tracks a trader's progress 100%. It fast tracks their progress. But then at the same time, you have to understand that there's always going to be a payoff somewhere. Taking trades on a live account and taking trades on a prop firm account is two completely different things. On a live account, I might have $100,000. I go into 10% drawdown. That's $10,000 that I've lost. That's $10,000 of my own money that I need to make back. Right? On a prop firm account, I lose $10,000. All I really have lost is between $600 to maybe $900. That's all I've actually lost in reality. And I don't have to worry about making that $10,000 back, because I can simply just purchase another valuation. And with prop firms as it is right now, with 8% or 7% and 5% profit targets, even if you blow an account with 10% drawdown, all you have to really do to make that back is do 13% or 12% depending on the prop firm. So your barrier to entry and your barrier of mistake is simply 2%. If you really think about it, 2 or 3%. So it takes the edge off, and there's a whole different culture when it comes to trading prop firms compared to live accounts. I truly believe that. Again, 10% drawdown on a live account, you have to make that money back. That's actual money that's coming out of your pocket. On a prop firm evaluation, 10% is $600, $700, whatever it might be. So it's two different things.
Yeah, 100%. I mean, it takes a lot of the pressure off. And you're funded with a lot of prop firm capital, over $1 million. Yeah. What is your process like with getting funded versus just trading day to day? When you're trying to pass an evaluation, how do you approach it versus, approaching either an account that's already funded or your personal broker accounts?
So in terms of, there's two paths that I want to talk about. So you've got the trader that has never been funded before, and this is his first evaluation, or he's blown a couple of evaluations in the past, and he's trying to pass this, maybe a fresh 100k. For that trader, I will 100% say take things slow. Take 2 months, 3 months to pass that 100k evaluation. Prove to yourself that you can actually trade. Prove to yourself that you are capable of actually making the 8%, making the 5%. Prove to yourself that you have that consistency, and then even if you get into drawdown, get yourself out of drawdown and have the confidence to know that yes, even though I've gone into drawdown, I've managed to get myself out without blowing the account. Okay, that is the approach that a trader who has never been funded before should go for. Okay, because that in itself is character development, trader development. That in itself is something that will add to them as a trader. That's inner work for them. For someone that's in my position right now, I don't do that at all right now. All I do is I purchase an evaluation. I may risk 2%, 3% per position, and I'll try and pass the account as quickly as possible. If I blow the account, yeah, it is what it is, purchase another. I'm in a position where I can. I am not looking to spend 2-3 months on an evaluation whereas I could just purchase 2-3 more evaluations within the span of 2-3 weeks and get to the funded stage faster. Once I'm in the funded stage, I'll go ahead and reduce my risk 1%, maybe even less than 1%, whatever it might be. I reduce my risk because that is real capital. That's real money that I can potentially make. So from there, it's like, cool, behave now. No more over risking, no more trade like an actual trader would trade, basically, instead of looking to go ahead and pass accounts as quickly as possible. That's something that I learned the hard way because I was trying to get to 1 million funded the right way, you know, doing everything properly, subjecting myself to time, risking properly. But then it didn't make sense because I'm already making money from other prop firm accounts. The money's coming in. The way I would trade back then and the way I'm trading right now, the place I am right now, it's two different positions. So I can go ahead and take a different approach, if that makes sense. So that is what I do for evaluations, and obviously with live funded accounts, it's just be strict with them again.
Yeah, and I think again, like, prop firms literally give you so much leverage to play with that you would be dumb not to take advantage of them. And it's really about finding a prop firm that's reliable, that, you know, you can be pretty sure is going to pay you out. And I think that doing that nowadays is easier said than done. You know, obviously Quant Tekel being one of the most reliable props in the space at the moment. But, you know, how do you kind of judge what prop firms are good to work with, and what do you look for in terms of red flags when working with a prop firm? Because you've traded a lot of different prop firm accounts. So what do you look for personally?
So because I have a circle of traders and people who are around me who trade, whenever I pick a prop firm, I usually go for prop firms that have been recommended to me by other people. I don't look, because there's so many prop firms out there, and I would not go for any random prop firm that I've seen on an advertisement on Instagram or Facebook. I tend to go for prop firms through word of mouth. So if I have someone in my circle who's a trader, yeah, and they've told me that yes, I've been funded with this prop firm and they've paid me out, then I'll look to potentially start getting an evaluation with them and passing their accounts as well, and hopefully getting a payout. But apart from that, I would not look at any other prop firm. It's literally word of mouth. If someone else vouches for you, and that's another thing in the prop firm space, word of mouth is very, very important. It's very, very crucial as well, because all it takes is one negative comment behind a prop firm for someone to be completely put off. Makes sense? So the way I vouch for it is literally just word of mouth. I have a circle of traders around me, people who I know that trade, and literally, who are you guys funded with right now? Oh, you're with this new firm. I started trading with them. They paid me out. Cool, let me try it.
Right. And just before we wrap up here, I just wanted to ask you, like, you've been through, you know, a really interesting journey, and I'm sure you've had your ups and downs with trading, as everybody has, like we just discussed. But if you had to go back to the beginning and do it all over again, is there anything you would change? Anything that would have helped you perhaps get here quicker? If there is that one thing, what would it be?
It would come down to social media. Again, there's been so many instances where in my first 2 years of trading where I will have done an analysis on, for example, EU or GU, and my bias for the day would be bearish. But then I'll go on Instagram and my favorite trading guru is posting a screenshot of him going longs, bullish. And I completely go ahead and change my bias because I think that, you know what, this guy's got more experience than me. He's obviously a more qualified trader than me. So let me go ahead and follow his bias. And what ends up happening is my bias is correct. My shorts for the day is correct and he was incorrect. But because I pedestalized him as a trader and someone who's in a position I want to be in, I've gone ahead and changed everything, and that's been my downfall. And that's happened multiple times. So if I could go back, I would stop doing that. If I had stopped doing that much easier from year one, I probably would have been profitable in year two.
Right, 100%, bro. Well, thank you so much for chatting with us. I think a lot of people have learned a lot from your journey. And congratulations on your results so far, bro. I think you're going to go from strength to strength. So thank you very much for chatting with us today, man.
Thank you very much for having me. It's been great, Ethan. Thank you. And hopefully I'll see you in person.
Awesome, bro. Yes, definitely. Well, yeah, that's it from us, folks. Thank you very much for watching our chat today with Zaki. And we hope that you took some value from this today. So cheers, everyone.